Hello, welcome to this video. In this video, we're going to be talking about what your optimum director salary should be in the year of 2023 to 2024. If you have an owner-managed business and you have a limited company, this video is going to be important to make sure that you get paid the right amount. Hello, my name is Patrick. I'm a chartered accountant, a certified UK trainer, fancy new logo, that QuickBooks Chap on the internet, and also head of accounts here at Boffix. Now, every year we have the same discussion, which is the most optimum salary for you to pay yourself as a director. And in 2023 to 2024, there's a lot of changes that makes that conversation more and more relevant. So first and foremost, what changes have we had? Well, we've had an alignment between the actual national insurance rate and the personal allowance. So whereas before you were finding yourself that the optimum salary was actually less than your personal allowance, you were leaving some of that personal allowance on the table. The other big change is corporation tax. Now, corporation tax for majority of the people will hopefully still stay at 19%. But there is an opportunity for that corporation tax to raise from 19% to 25%. Now, we've done a whole dedicated video on what, why, when, and everything else that goes with it. If you are interested in that, then please do go and look at that video on the channel. So that leaves us with a bit of a conundrum. What is going to be the best way for you to pay yourself going forward? Now, first of all, what salary to pay yourself? Well, it's completely up to you. And actually, sometimes what we're about to say is the optimal way of paying yourself doesn't necessarily mean it's going to be the best for you. For example, if your business is currently making a loss, then paying yourself the optimal amount doesn't give you much room for actually adding any dividends in play. So in a lot of circumstances, the best way to do is just pay yourself a market rate, whatever your salary deems to be, for you to be able to survive paying your mortgage and everything else. That's also a really good point. If you've got a mortgage coming up or anything like that, then sometimes actually paying yourself the market rate, what you believe needed to grab that mortgage, is going to be important for you. So what I'm saying here is never a one-shoe-fits-all scenario. What we're going to talk about today is what the optimal amount's going to be. That doesn't necessarily mean that's right for you. So the optimum direct salary for 2023 to 2024 is $12,570 per annum. But the lower earnings limit is $6,396 per annum. So basically, you've got yourself an opportunity to pay yourself in between. And the secondary earnings limit for national insurance is £9,100 per annum. If your annual salary exceeds this amount, then your employer will need to pay NI contributions if you don't qualify for the employment allowance. Remember, the employment allowance means you get a discount of up to £5,000 per annum on the employer's national insurance liability, which can be really handy for actually saving yourself those additional taxes. So with that being said, what is the most optimum director salary for a sole director in 2023 to 2024? Well, sole directors are going to be slightly different. You're not going to benefit from the employment allowance. So realistically, if you want to avoid having to pay national insurance out at all, then £9,100 is your only option. But in theory, we don't really recommend this. The higher optimum direct salary of $12,500 does save you a little bit of corporation tax. And depending on which corporation tax you have, so if it's going to be 19% to 25%, could be even higher. So what you should pay yourself, well, if you're happy to pay that national insurance each and every month and pay that little contribution to your overall tax bill, then the optimal way of doing it is that £1,047.50 per month, and pay yourself that going forward. Now, if you've got multiple directors, or if you've got the opportunity to have other employees as well, then actually that national insurance element will bring into it the employment allowance. So that in that case, then at that point, definitely pay yourself that $12,570 to avoid any of that personal tax allowance going to waste. So there we have it. This is this year's recommendation, but it doesn't stop there. I would really recommend going out and having a chat to your accountant to make sure. The way we're going to tackle it at Boffix is send out an actual question and ask people to make their choice from there. But I really do think having that conversation, looking at all of the options, is probably going to best for you. Gone are the days where it used to be one shoe fits all. Now it seems to be there are a lot of moving parts, and it's always best to make sure that you get the right one for you. My name's been Patrick. Hopefully this video has been useful for you. Don't forget to use the comments below. Let us know what you feel to the changes that have happened. Are these positive? Are these negative? Do you think it actually going this way round, we're going to see better director salaries in the future? It's always going to be worthwhile to know, especially with that 25% corporation tax. Maybe, just maybe, we should be looking to pay ourselves a higher director's salary anyway. So it's going to be an interesting one to have a conversation down below, so that we can probably do a further video on the subject going forward. As always, don't forget to use the link below to have a conversation with one of the experts at Boffix if you are unsure in any way. My name, as always, has been Aaron Patrick. This video has been an absolute pleasure to do for you. If you've got any questions at all, please do put them in the comments section below, and we'll be sure to get back to you. See you in the next video. Bye for now.